Headlines, headlines, and more headlines. You've already heard about the big slowdown in activity in the Toronto Real Estate Board for the month of April 2022. Today I want to dive deeper into those numbers. We're going to touch on Toronto, Freehold and Condos, Durham, York, and Peel regions like we always do. So stick with me please on the other side of this intro and we will find out what exactly happened in real estate in April 2022. Hey everybody, it's Rob Marsiglio back here with the Robert Marsiglio Realty Group. You can see the little sign action behind me over here going on. Today, let's talk about what happened, all things Toronto Real Estate Board related. Yes, we did see the slowdown of those headlines I just kind of showed on the intro there. Where did we see the slowdown the most? How did Toronto hold up? How did the regions surrounding Toronto hold up? That's what we are going to dive into today. So to start, let's take a look at TRREB, the Market Watch report that they put out. Let's read what TRREB had to say. Okay, so the Greater Toronto Area housing market continued its adjustment to higher borrowing costs with the number of transactions down on a monthly and annual basis. So as has been the case with previous rate tightening cycles, some buyers have moved to the sidelines to determine how they will reposition themselves in the marketplace given the higher rate environment and related impact on affordability. So important to touch on here. Yes, prices have dipped. That is important for people who have equity in their homes. If it's an equity position you're in, you've lost some equity in your home. What's important to realize though is for buyers getting in, unless you're locked in at a rate that is still locked in, you've also lost purchasing power with rate hikes that have happened. So even with prices coming down, the amount of house you can afford has come down in an equal proportion, if not maybe a little more in some instances. So across the board, 8,008 home sales were reported through TRREB in April 2022. So that's down 41.2% from April 2021. So you can see over here in April of 2021, we had 13,600 sales down to that 8,008 number. Year over year, the greatest decline was in the 905 area code, and we'll find out exactly what regions experienced the biggest dip out of Durham, York, and Peel. The home price index was up 30.6% year over year in April, but it was down compared to March still. So continuing that trend we saw from February dropping down into March, continued to drop into April, dropped more drastically in some markets than others. Average selling price was up by 15% compared to last year, but it was down. This is the TRREB average price for, last year, but kind of comparing it back to March, it was down from the month before. So Jason Mercer, our chief market analyst, said despite slower sales, market conditions remain tight enough to support higher selling prices compared to last year. However, in line with TRREB's forecast, there's evidence of buyers responding to increased choice in the marketplace, with the average and benchmark prices dipping month over month. It's anticipated there'll be enough competition between buyers to support continued price growth relative to 2021 is what I want you to hear. So when you're hearing these predictions online still that, we're going to see 12 to 13% price growth, that's not going to be from, February 2022 to December 2022. That's going to be comparing to last year. And I do even think we may see a pullback in some of those peripheral markets, the 905 markets, even compared to last year. So we're not seeing that yet, but if this trend continues, we could see prices, later on in the year, maybe late Q3, Q4, actually dip below where we were in 2021 at the same time. So with that all being said, let's get into our numbers like we usually do. We're going to start with Toronto Freehold and we'll work our way then from east to west, kind of in the 905 after that. So let's start with Toronto Freehold, and you're going to be excited. I've got a new spreadsheet for you to look at this month. So here we are. You can see I've been tracking all these numbers going back to last year to kind of give you a year over year change. So this column will be compared to what happened last year, and this will be what happened month over month, what happened to the month prior. So in Toronto, on the Freehold market for 2022, we saw almost 2,600 listings. So that's down from last year's 3,400 listings, and also down from last month's, almost 2,800 listings. Sales also took a dive, both year over year and month over month, so down to 1,300, where that median sale price hovered at around the same. It dipped 1.2% month over month, but it's still up 12.5% from last year. And it's crazy to say that a 12% gain is a market cooling number. That's still some serious gains year to year if you bought a house last year at this time. But you can see the dip that everybody was talking about earlier in the year. Like we were up 20% year over year back in January and February, and that's slowly been coming down. The sale price to listing price ratio was still at 1.113, days on market of 7, and here's a new number I want to show you. 2 new numbers actually, this is going to be fun. But months of inventory, 1.54 months of inventory. So if we had no more sales, or no more new listings, my apologies, in the Toronto Freehold market, it would take us about a month and a half to sell out of everything at the current rate of sales. This is the new number I wanted to also show you, is suspended and terminated listings. And I want to draw your attention to just kind of where we're at this year to date so far. So you can see that suspended and terminated listings, that means listings being pulled off the market, have been increasing since the start of the year. That's not really an alarming trend. The same thing happened back in 2021. I think what's important is to look at what's happened year to date so far. So you can see that in the Toronto Freehold market, we've had 15.5% less listings hit the market as opposed to last year at this time. There's been a 23, almost 24% drop in sales. But again, you're going to want to relate this number to the kind of change in listings. So listings have come down 15.5%. You'd expect that, suspensions and terminations would come down at about the same pace. So, even at a lesser clip, those have come down compared to last year. So that's not too alarming to see these suspended and terminations going up. What's going to be interesting is later on when we get into the 905, you'll see, no peeking ahead, everybody, but you will see that those numbers, there's a lot bigger spread. How about the condo market in Toronto? So we saw a slowdown again on all fronts, year over year and month over month. Not quite the same slowdown in listings though. So that 3,700 listings was down 10.5% from last year and almost 5% from the month before. Sales though, again, down almost 36%-ish from last year and just over 27% from the month before. That median sale price kind of hovered at around the same range we saw. I'll show you these graphically as well. It's a bit more of a bubble with the condo market in terms of, I don't mean a bubble that it's going to pop, but I just mean it's a more gradual, it's a nice crest, a nice hill that we're seeing, not a giant mountain peak like we're seeing in some other markets. Again, our sale price to listing price ratio, 1.078, days on market, the median days on market is 8. And our months of inventory, it's creeping up to that 2 months of inventory. So you're going to want to see this at around 4 before it's considered a balanced market altogether. But back in January, I don't have the number here, we may have had, 2-3 weeks of inventory. So it has drastically increased from earlier in the year. Same trend with our suspended and terminateds. When I compare where we're at year to date, this kind of 7.76% dip compared to last year, it's pretty much right in line with what we see in listings. We're down in listings year to date at this point. We're down about the same in suspended and terminateds. So as promised, here's a little graphical representation of the median sale price for Toronto Freehold market we'll start with, and then I'll pull up the condos after. But you can see the big run up we had from July 2021, slowed down in growth a little bit over the last quarter of last year, and then it peaked again. And then a pretty significant drop from, February to March, like relatively significant, and then a bit of a leveling off that we saw. Here's what that same time frame looked like on the condo side of things. So again, here's that slowing down dip in Q4 of last year with the big run up to actually March is when prices peaked in the condo market in Toronto. And then it's just kind of slowly spilled down a little bit in April. As rates rise, as people are priced out of bigger homes, condos are still more affordable. There's the other factor of people coming back to the city of Toronto, and again, condos being that entry price point that I think, even with rates going up, will kind of soften this drop a little bit. I think condo values will hold a little better than we see in other market segments kind of for the next year, is what I'm seeing. Okay, we are done with the 416. Let's get into the 905 now, and we will start in Durham Region. So again, now we're going to lump in our freeholds and our condos all together here. And let's look at April 2022. 2,300, almost 2,400 listings, was only down 0.8% from last year, but there's something I do want to show you that this number may be a little bit inflated. We're also down about 6% from last month. Sales, again, way down in that kind of 37% range year over year, and even month to month, a big drop in sales activity. And the median price point for Durham Region has dipped back below that $1 million number. Spoiler alert, it's the only market that we're looking at that has dipped back below that $1 million number. Just as a point of reference, let's just look back at where prices were last year at this time. Not even last year at this time, sorry, but late last year. You can see we haven't dipped quite back down to even Q4 numbers. But we will watch as this drop continues, is my prediction, for at least the next few months to see where we end up in relation to next year. So, like I said, year over year, we're still up 20% from where we were price-wise, continuing that decline from the peak back in February, and the sold price to list price ratio of 1.158, days on market of 7, months of inventory. It's still the tightest market in terms of inventory, only 1.25 months of inventory. Here is a number that's a bit alarming. So again, suspended and terminated listings have been increasing in the Durham region pretty significantly. A tripling here, almost another tripling here, and then a decent increase into April. Remember how I was saying back with the condo market, for example, this percent change year over year compared to the new listings was relatively similar? I want you to look at the spread in, Durham. Listings were down 10.36%, but suspended and terminated were up 24.65%. So a bunch of these suspended and terminated are actually going to be lumped back into new listings. So some new listings, the same listing might be listed 3 times, and it's going to really inflate those numbers. So that's why I'm saying, sure, it looks like we're only down 10.36% in new listings year over year, but I bet you that number is a lot, the slowdown's been a lot more significant in Durham region, especially kind of going back to middle of February and onwards. This indicator and this spread leads me to believe that we do still have some price drop to go. As we start seeing the suspended and terminated go down, that means that kind of sellers will be maybe listing more realistically with their expectations, or their expectations will be more realistic. And I think once we see these numbers start to level off and come down, that's maybe an indicator that we've hit the bottom of the market. I'm never advocating for a client to try and time the bottom of the market. I think if that was possible, we would have a lot more billionaires in real estate, because, you would always buy low and sell high. That's just not the case. So let's keep our eyes on what this suspended terminated number does going forward. And again, as we start to see those come down, I think that we'll have kind of a more indicative, true market value number for what the actual median sale price will be in the 905. On to York Region now. And again, York Region, we saw a big slowdown in sales activity, the kind of the biggest dip. Listings were down 18% from last year, about the same amount from last month. Sales were down almost 50% though, so things really did grind to a halt up north of the city, even month over month down 34%. That median price point, still a very healthy 1.32, but again, 12.96, 13% up from last year compared to almost 20% in Durham. Maybe leads me to believe that Durham does have even more of a ways to come down. And again, a 5.7% drop from the month before. When we're looking at the sold to listing ratio, that's 1.069, 8 days on market for the median, and months of inventory was 2.4. That's actually the closest to a seller's market that we're going to see in this month's report. Our suspended and terminated is getting back to that number. Let's focus down here again at our totals year to date, up 7.6% from last year. And listings are down. So not quite the spread we're seeing in Durham, but it's also probably why, Durham looks like the annual change isn't as much as it is in York, because, as these listings are being canceled and terminated, they may not be going back up on York. When you're seeing less being canceled and relisted, it's going to not inflate that listings number as much. So that's kind of my explanation for why we're seeing, a seemingly not so much listing slowdown in Durham, and we're seeing it more in York Region. And as always, we'll wrap up with Peel, working our way, like I said, east to west. So almost 3,900 new listings last month, down 9% from the year before, down 6% from the month before. Sales, again in Peel, really slowed down. 1,500 new sales reported, down almost 42% from last year, down almost 25% from last month. The median sale price, 1.13 million, is up 20% from last year, but still seeing that decline. And again, our sold price to list price ratio of 1.07, days on market of 7, months of inventory of 1.74. Our spread from the change in listings to the change in those kind of terminated listings, you're seeing this spread is similar to what we saw in York Region. You know, York Region is about 21, 22%, and here we're about 23% spread. So with all that being said, the numbers I'm keeping my eyes on for the 905 are going to be these year-to-date totals. Let's see if we can kind of close the gap between these suspended and terminateds to the actual change in listing price. I think once that starts balancing out, that's when we'll kind of know what the true values, like kind of where we'll end up as the bottom of this price decline as the year goes forward. One thing I want to highlight quickly this month that I didn't last month, and I think this is a knock-on effect of the market, as prices come down, but it's less affordable to buy because of rates going up, the next obvious choice is people are moving to rentals. And I think we're really going to see some strong rental rate growth in the downtown core of Toronto specifically. Maybe in the peripheries as well for people who want to come out to the suburbs. But again, affordability is going to become an issue. But let's see what's happened kind of year over year in the 1-bedroom and 2-bedroom condo markets. You can see that rents are up from last year, 20% on the 1-bedroom side and almost 19% on the 2-bedroom side. So to put that in dollar terms, that's almost $500 a month for a 2-bedroom condo in the city, and it's about $400 a month for a 1-bedroom condo in the city. So again, I think that's something we need to strap in for. I think we will continue to see rental rates go up. It's something I will include in my monthly updates going forward to keep you informed as to what's going on there as well. So as a general wrap, yes, we are seeing a slowdown in activity. You can see the slowdown is more significant in the suburbs than it is in the city, and the slowdown in prices, the decrease in prices is more significant in the suburbs where, again, we did see the biggest run-up. Very quickly, I just want to show you exactly what one of those mountain peaks look like that I referred to earlier on in the video. And this is Durham Region. So you can see the big run-up they had all the way up to February, where we peaked out at around 1.2 million as a top median price point, and now we're back down to that 9,985 number, 999. So I think that we're going to see this continue to drop off. Will we level out back around here where we were in early 2021? Who knows? Will we go a little bit further, a little less? Only time's going to tell there. What I do think, though, is that the kind of correction will be a little bit softer in the city as more people come back. Gas prices through the roof, people wanting to, maybe a work from home life isn't for them anymore, want to get back into the city. Maybe we'll see those prices hold a little bit more. Big thing to keep an eye on will be the next Bank of Canada rate announcement, which is scheduled for June 1st. It's predicted that that's going to be another at least 50 basis point hike in the overnight rate. So again, variable mortgages will be affected. I think we'll see what happens with fixed rate mortgages, but we see a bit more of a creep between now and then as well. Lots to keep our eyes on. So stay tuned to the channel between now and then for kind of updates on everything that's happening. I'm doing my weekly Whitby wrap-ups for people who are living in the Whitby area, so stay tuned for those. And again, if you have questions about your market specifically, what are the months of inventory for your home type in your neighborhood, please do reach out. I'd love to put some numbers together for you to take a look at. If you're enjoying this content, please subscribe to the channel. Like the video, share it with a friend, share it on social media. Why not? Do all those good things. But I look forward to speaking to you all again in my next video, and at the very latest, next month. Have a happy May, everybody. Cheers.